We begin with that Bank of England decision. No change at the Bank of England. Rates stay unchanged at 0.25%. The Bank of England's asset purchase programme remains at $435 billion. The corporate bond target remains at 10. The vote, 6-2 on rates. So the Bank of England, the vote 6-2 on rates. The minutes come out as well, together with the forecast. Let's cross over to Bloomberg's Guy Johnson to get the wrap, Guy. The cable rate down about 0.4%, about a third of 1% on the session, Guy. What are you seeing in the minutes?
We're just starting to get the details going through. So 6-2, as you say, that's likely to be McCafferty and Saunders. Remember that they are the two that have been sticking their necks out against the flow, as it were, suggesting that they feel that rates should be going higher from here. The MPC is, though, warning that more tightening is likely than the markets is pricing in at the moment. Now, remember, the curve has steepened up since May really quite considerably, and basically what they're saying is that maybe even that is not priced accurately at this point in time. So that is an interesting story going forwards. I think with the run that sterling has had going into this, with some expectation that maybe there was a tail risk chance that we would get a tightening here, there was the obvious sort of downside risk to sterling. The other thing to remember, John, is that the market, from a CFTC positioning point of view, has become significantly less short of late than it has been, and as a result of which the option for those shorts to go back on again was certainly there.
Guy, looking at the forecast, the Bank of England cutting the 2017 GDP forecast to 1.7% from 1.9, 2018 1.6 versus 1.7. The inflation forecast broadly unchanged, but what stands out to me is a pretty aggressive cut to wage growth forecasts at 2018 now at 3% versus 3.5% just a couple of months ago. And if you're at the Bank of England, and I guess if you are pushing for a rate hike because you think there's a tight labour market and wage growth is coming anytime soon, that's quite an aggressive cut.
It is, and this is the big conundrum. They think that kind of we're at the neutral rate when it comes to unemployment at kind of the levels we are at the moment, but we're not getting the wage growth coming through. And the fact that they're cutting it is interesting. Maybe that does suggest that maybe the bank think that there may be a little bit more slack in the economy going forward from here.